Here we are, live on Liberation Day, April 2nd. As you can see, Donald Trump's got an early start this morning. We went onto Truth Social, and the first thing he posted was, it's Liberation Day in America, and it's going to be one of the most volatile days, I think, for the markets. So there's going to be a lot of volatility. If we look at the markets right now, if we look at where we're at right now, NASDAQ is 1.31% down from yesterday's futures closed. You've got that happening right now. Let's quickly just see if we refresh this. Okay, the NASDAQ's going to open in about 2 minutes, and then we can see how the market looks for today. When it comes to crypto, a little bit down on the altcoins, although Bitcoin holding at about 84,660. And I think this is just the start. I think what we're going to analyze is, what does this day hold for us? What's going to cause volatility? When is the volatility going to come? And let's analyze this whole tariff, this whole Liberation Day tariff picture. It's going to be a very fast moving show. There's going to be a lot of live news breaking during the show. We're going to bring it to you as and when it actually happens. So it's going to be a lot of fun, and it's going to be a very big show. So without any further ado, if you're not already subscribed to the channel, you know what to do. Get me to 1.16 million subscribers. Come on, it's 48 more subscribers. I'll get the show on the road. Let's go, guys. Alrighty, happy Liberation Day to those that celebrate. And if you're not celebrating today, maybe in future you will be celebrating. Maybe in future it will become a United States national holiday, Liberation Day. The day that the United States got liberated by enforcing tariffs on countries that have already had already enforced tariffs unfairly, according to Donald Trump, on the United States. And it's quite a big day today, as 𝗏𝗏 said, the Treasury Secretary said. He basically said this is the first time since he can remember that the playing fields are now made equal. Listen to this.
April 2nd, we are going to disclose the reciprocal tariffs. I'm not going to get out ahead of President Trump. He's going to announce them 3 o'clock on Wednesday. And I think for the first time in decades, probably since I was a college student, we're going to see a fair trade, and everyone will have the opportunity to lower their tariffs, lower their non-tariff barriers, stop the currency manipulation, stop subsidizing labor, stop subsidizing, stop providing cheap loans, and they make the global trading system fair for American workers again. And if President Trump campaigned on this, he has a mandate, as you know. He had a substantial electoral college majority. He won all 7 swing states, and he won the popular vote. So he has a mandate to do this. He's doing what he promised he would do.
Okay.
He's bringing.
So promises made, promises kept. Trump's election promises made that he's going to enforce tariffs, and the tariffs are starting today on April 2nd. Now, it's got quite a busy day today, Trump. He woke up this morning, first thing he did, he went onto Truth Social. It's Liberation Day. And then you can see that he's got a very, very, very busy agenda today. He's got a meeting with an expert trade council, which started about 30 minutes ago. There's a whole lot of stuff happening, but the big address is going to be at 4 p.m. Eastern, and that's going to be televised live. Now, we will, in all probability, we will be live here today, and we will be covering that address. If we're not live on this channel, we'll be live on our crypto live channel, and there will be a link below for you guys to join. So we will be live if anything happens here today, but it's a very, very, very busy day for Trump. The big announcements are going to be made, and you can see that today, and also for the last couple of weeks, the search for tariffs is pretty much at an all-time high. You can see that everyone's starting to understand and to start looking for the word tariffs, and not surprisingly so, because it is actually quite a big thing, and we're going to talk about all the different implications of all those tariffs. So if that sounds good to you, what I need you to do is obliterate the like button. I see we've got a lot of people here today, but I don't see as many likes as we usually have. So obliterate the like button. Let's go on and understand exactly what's going to be happening today. So, as 𝗏𝗏 said when we played that clip a second ago, he said, look, what's going to happen is the tariffs are going to be imposed today, and they're going to come into effect either today or tomorrow. After that, that is effectively the cap. So whatever tariffs Trump puts on today, whatever he announces today, that is what they call the cap. And then the idea is for countries to negotiate down from there. So you kind of know that whatever he comes out with today is going to be aggressive, because you're not going to announce tariffs and then negotiate upwards. So you want to announce, hey, these are the tariffs, and if you want to negotiate your way downwards and start being more fair, that's probably what's going to start happening. So expect that today will be a cap. Scott Bessent, who's become a spokesperson for the tariffs, has pretty much been talking about that all the time. And you can see that there's a lot of countries that are going to be affected by the tariffs. Obviously, the US's major trade partner is going to be affected the most. So people like Canada, Mexico, China, Vietnam, India, those are the US's major trade partners. They're going to be the most affected. And we're going to start seeing different reactions from different trade partners, right? So if you look at a map of the United States trade partners, and you can see specifically who has the biggest trade surpluses with the United States. Now, what is a trade surplus? For those of you who don't know, it is a scenario where you're importing more than you're exporting more than you're importing. So here what you can see is you can see that China is exporting to the United States 295 billion more than they're importing from the United States. So the net trade surplus for China is 295. Mexico has a very similar scenario. The US is importing $172 billion more than they're exporting to actual Mexico. And then it goes Vietnam, Ireland, Germany, and so the list actually goes down. So you can expect mixed reactions from these countries when the tariffs actually start coming in. Some of the reactions are going to be the same as Israel and Vietnam, where Vietnam, which, by the way, is quite a big trading partner to the US, as you can see over here, with a trade deficit of $124 billion in 2024, they have come out and they've basically said, look, we're slashing our products. We don't want to get into this fight with the United States. We're going to slash the tariffs, and the US is going to slash tariffs on us, and we're going to implement fair trade. That's going to be the response from a lot of the trade partners who don't want to get into this fight and who want to stay on the right side of the United States. But there is going to be a cohort of many other countries that are not going to go down that easily. The first one is going to be Mexico. Then you've got China, and China is probably the one, because they have the biggest Cold War and trade war with the United States, and because they have the largest trade surplus, as you can see, 295 billion. China's the one that's going to fight hardest. And what you can see is that they're already starting to put in a whole lot of different things. One is they are restricting companies from investing in United States companies. And the reason why they're doing that is because they want to create a bargaining tool to say, look, if we can't trade with you, we're not going to invest in your companies. And that gives them a bargaining tool or trading chip to carry on doing. Also, what China is doing is it seems to be rounding up all the people that are going to be affected by the trade, by the tariffs, and starting to come and they want to talk about Europe seeking, so they're looking to offset the US reliance. In other words, they're looking to say, look, if the US is going to impose tariffs, then let's meet and see how we can all work together to not be so reliant on the United States. So then they'll create incentives for people to import stuff from Europe instead of importing it from the United States. And so there's going to be two different approaches here. One approach is going to be countries that basically agree and decide to just move forward, and others are going to actually try to fight back. And either way, the fight actually starts tonight. You got the Canadian Prime Minister. Again, Canada is a major trading partner for the United States, a 64 billion surplus, as you can see over here, but a major trading partner. And their new Prime Minister came out, and listen to what he said.
Canadian Build Initiative is exactly how we must respond as a country going forward as the world changes. With Canadian materials and, above all, dedicated, talented Canadian workers who make New Flyer a true global success.
So 𝗙𝗏𝗎 basically says, look, we're going to fight this. We're not going to take this line down. We're going to fight this. And so you've got effectively a trade war which starts today at 4 p.m. Eastern. And that's exactly what Caroline was saying when she was speaking to the reporters. She said, look, Trump's been teasing this for a long time, and the tariffs are going to come into effect.
The tariffs, can you say what the latest thinking is on the start date? I know you were just in the Oval. Are they all going to take effect this week on the reciprocal tariffs? And whenever they start, is that enough time for companies and everyone involved to adjust to that start date?
My understanding is that the tariff announcement will come tomorrow. They will be effective immediately. And the president has been teasing this for quite some time, as you know. He's talked a lot about April 2nd as Liberation Day in America. It would be taking place today if not for April Fool's Day. But tomorrow will be the day, and he's been talking about it for a while. And as a result, you've seen these companies make commitments to investing right here in the United States. Jasmine.
Thank you so much. I wonder, back on tariffs, what, if any, market indicators is the White House looking for to see if this tariffs plan is successful down the line?
Well, look, the president has been asked and answered this question about the stock market and whether he's watching it. And I've said, and he has said, the market is a snapshot in time. Yesterday, Dow futures were up. And there's been a lot of talk about the market, and it was up yesterday. So, look, the president wants to ensure that all Americans make out well, particularly Main Street. That's the focus of these tariffs. But as I've said repeatedly, just like they were in his first term, Wall Street will be just fine. Shelby.
Okay, so let's talk about what will actually happen on the markets today. So the first thing is, I think what the markets are pricing in is they're pricing in quite aggressive tariffs at the moment. What the market's pricing in is, it seems like to me, when I look at what's going on in the markets are pricing in a broad-based tariff scenario where the tariffs are about 20% across everything. If Trump comes out with more lenient tariffs, in other words, 10% tariffs or 15% tariffs, then the S&P will fly. The only catch is that, remember, Trump is coming out at 4 p.m. Eastern. The markets are closed at 4 p.m. Eastern, which means that the market that will be the most reactive when this actually happens won't be the NASDAQ or the futures market, but it will be the crypto market. So I think you got to be on high alert today. Now, if you ask me which way I think this is going to go, I think the market has factored in the worst case scenario, high tariffs on everything. And I think that Trump could surprise us by being a little bit more lenient than we actually think. It could go the other way. Either way, the way that I see it is that crypto will be the first market to respond. And I think we're going to get an overperformance and an overreaction from crypto. Why do I say that? Because again, people are going to have no place to go long or no place to go short based on the announcements. And the only barometer, the only place where they're going to be able to hedge themselves in a 24-hour market is going to be the crypto market. So we could get extreme overreaction. So I say this again. Longs could be liquidated. Shorts could be liquidated. Longs and shorts can be liquidated today. If you're trading leverage, make sure you have money in your leverage account to make sure that you can withstand the volatility. As I say, think about it like a funnel like this, where you've got all the weight of all the markets coming into one market that can actually trade, and that is the crypto market. So expect massive volatility. We'll be live here at around 4 o'clock Eastern. We'll be covering the event with you guys. Hopefully we'll be trading the event with you guys if anyone's still got money left to trade. Josh, do you still have money left to trade? You do. So Josh will be here. He will be trading with us live. Do you want to show your account here today? But show the small account, bro.
There is no small account.
No, there is no small account. Okay, there's only a big account. So that's what I think is going to happen. I think we're going to get a lot of volatility specifically on the crypto markets, and I think it's no coincidence that they made this announcement at 4 o'clock after the markets closed, so that there wouldn't be mayhem. Now, of course, the futures are open, but the futures is not a liquid enough and big enough market after hours to actually be trading. And so I think expect a lot of pressure today on the crypto markets. Let's talk about why Trump is doing this, and what the effects of this are actually going to be. So think about it like this. Trump campaigned around this tariff promise that he's going to come in and he's going to bring that he's going to do tariffs, and that the tariffs are going to strengthen the American economy. The only issue is that when he imposes the tariffs, two things are starting to happen. The first thing is that prices will rise. Okay, so when the tariffs are implemented in the short term, prices will rise. And when prices rise, it's going to increase inflation. There's no doubt about that. And I think that is pretty much consensus in the short term. And in fact, not only is it consensus in the short term, but if you look at a case study of the last time that Trump did tariffs, he did tariffs on washing machines, right? I mean, it was a crazy tariff, but it was a tariff on washing machines. He slapped up to 50% on imported washing machines in 2018. Foreign producers did rebase some of their production to the United States, and that did actually boost employment a bit. But what landed up happening is that they lowered laundry equipment import. More of it was in the United States. However, what landed up happening is that Americans actually landed up spending more on each washing machine item. So it actually did increase the price of washing machines. So you're going to get, in the short term, you're going to get increased inflation. In the long term, you're going to get stronger United States companies because you're going to move all the investment into the United States, which means you're going to have higher employment and you're going to have a much stronger United States companies. US companies will either sell, in this case, let's just talk about washing machines, will either sell more washing machines in the United States, or by removing the unfair tariffs that the other companies have, they'll actually be able to export some of the equipment that is manufactured in the United States. And so what you can see is that already this has taken effect, and a lot of companies are now starting to invest in the United States so that they can sell into the United States markets and that they can produce in the United States markets and sell those to the countries once the tariffs have actually been removed. So short term, yes, we are going to get increased inflation. That's the first thing that happens short term. But in the long term, it does make American companies stronger. It makes the American employment situation a much better employment situation. So Trump is actually executing on a brilliant long-term master plan. He's not executing on a short-term plan looking at the Dow Jones and the markets in the next 6 months. And when this actually happens, and when you start seeing all the investment in the United States, and when you start seeing US companies actually selling more products, then you're going to get a situation where the markets actually start to fly. So think about it like this. In the short term, markets will dip because of the uncertainty and because of the increased inflation. And because we get increased inflation, Powell won't be able to reduce interest rates. However, in the long term, you're going to get a lot more investment in the United States. You're going to get a lot more manufacturing in the United States. You're going to get a lot more jobs in the United States. And it's going to make the US a much healthier economy. Specifically, it's going to make the US an economy which is not reliant on government spending. And we spoke yesterday about how reliant the US has become on government spending. So you're actually long term, if I was a president or a CEO moving into a company or into a country, and this was the situation that I was presented with, I would also take the short-term pain because I would see the long-term gain that this is creating. Again, remember, making the US not reliant on government spending, cutting government spending, which is massive, making the US a producer powerhouse, allowing US companies to sell their products to US people, which currently they can't do because you can pretty much import anything from China because there's no tariffs. But the Chinese place massive tariffs on any imports from the United States. And so what I think is in the short term, we're currently getting a dip in the stock markets, and you can see that the futures are slightly down on this. But in the long term, two things are going to happen. One, you're going to get stronger US companies. That's the first thing. But the second thing that's going to happen is right now, because of these tariffs and all the uncertainty around tariffs, we're in a situation where companies are, because of the uncertainty, they cannot invest. Consumers cannot buy things because they're not sure what the next move is going to be. So just imagine you're a company and you're supplying, I don't know, washing machines in the United States. What do? Do you order the parts or don't you order the parts? You don't know what the tariffs are going to be in the future. Everything is completely uncertain. And so what Trump has done indirectly through this is he has caused a lot of uncertainty in the markets. And markets don't like uncertainty. It scares them. And so what you've realized is that right now, the TradFi markets are in extreme fear. Not only that you can look and see that the fear and greed has dropped from 22 to 15 in the last 2 days. That is how uncertain the markets have become. And if you look here, US economic policy uncertainty index hits the highest level in history. How did the market perform following other previous spikes of this? Well, this is the good news. In periods of maximum uncertainty, what happens is the economy slows, right? Markets go down and the economy slows because when people are uncertain, they don't make investments. When people are certain, that's when they land up making investments. Specifically, think about factories and big companies investing. They don't want to invest if they don't know what the policies are going to be going forward. But when they do, that is when they actually invest. And so right now, the US economic policy uncertainty index hits the highest level in history. And every other time that this has happened, afterwards, the markets have rallied. And so again, Trump is saying, look, I'm worried about the markets in the short term. Let me cause instability in the short term. Let me put in the tariffs. Let me make US companies stronger. And at the same time, in that period where there's all this turmoil and all this uncertainty, people won't spend, companies won't spend, and as a result, the economy will slow. And when the economy slows, what will happen is there will be more job openings, or there will be more unemployment, and there will be less inflation. And that will set the stage for the Fed to have to reduce interest rates. And so what you can see is Trump has played the ultimate game of 𝗿𝗏𝗍𝗫 here. By talking about tariffs, not only is he making the US stronger, but he's actually in the short term caused uncertainty. And that uncertainty has caused for a decline in many of the key indicators that we actually look at. So for example, the US service sector is falling apart. Flight bookings are down 1.7 standard deviations in a month, which means that people are not spending as much as they used to spend on flights because they're worried about the future and they're starting to hoard their money, right? Also, yesterday, we had a key bit of information that pumped. It's the US ISM Manufacturing Purchases Index. Now, what is this US ISM Manufacturing Purchases Index? Pretty simply, it is a monthly gauge of the economic activity in the US manufacturing sector based on a survey of manufacturing supply executives. Now, if they say it's 50 plus, they expect the manufacturing sector to increase, and if it's minus, it's decreasing. And the reading that we actually got yesterday was we got a 49, which is under 50. Now, the previous one was above 50, which means that they were much more optimistic and they saw much more expansion. Now, because of tariffs and because of the uncertainty, they've gone back to not below forecast. They forecast 49.5 and now they are on 49. But that wasn't the end of the data. As you should actually follow this Frontrunner's account. It's our Frontrunner Twitter account, but it really has become one of the highest alpha accounts. There's a link in the description, which Josh is going to put in immediately. He's doing it for you guys right now. But what you can see is that the new orders are the weakest since April. Why is that significant? It shows that people are too scared to order things to arrive. Remember, when you order something, you typically order things way in advance. And if there's uncertainty, you're not ordering a lot. So if you don't know what's happening later on, you're too scared to order a lot. And that's exactly what's happening here. You can see that right now, new orders are the weakest that they've been in a long time. Not only that, there's another interesting data point which I saw, which is the new orders to inventory ratio. That is how much inventory the factories are holding versus what the new orders are. And you can see that right now, the new orders to inventory ratio is dropping. Now, what does that mean? It means that that manufacturers aren't getting orders. And when they are getting orders, the orders relative to the stock or the inventory that they have are very low, which means they will produce less, which means that the economy will slow down, which means that we have the ultimate game of 𝗿𝗏𝗍𝗫 at play, because what that means is if the orders are slowing down, then the jobs are starting to slow down because, hey, I'm not going to take on those extra workers. And that's exactly what's happening. As a result, the GDP forecasts have now gone from a positive GDP forecast to a negative 3.7% GDP forecast for Q1. Negative 3.7% doesn't sound like a lot. However, when you look at the swing, because we went from positive to negative, since January, the GDP expectations have gone down 7.6%. That is a monumental, massive decline in GDP. You're talking about an expectation of almost 10% decline in the US as GDP. It's huge, but it's also exactly what Trump wants. Because if Trump can go to Powell and say, listen, buddy, the economy has contracted by 7.6%. The economy's contracted by 7.6%. The jobs, the ISM data has gone down. The jobs have gone down. The orders have gone down. You need to do something to stimulate the economy. Drop your interest rates. Stop your quantitative tightening and give me quantitative easing before you land up breaking this economy. And that is exactly what Trump's after. And that's exactly what's happening. So in the short term, a little bit of stock market pain. A lot of the stock market pain, to be honest, I think has already been priced in. We will get volatility today. As you can see, we're starting to have volatility today. We will get volatility today. The majority of the volatility will come towards the market close because remember at 4 o'clock, Trump, and you may also get a whole lot of leaks from all these meetings that are currently happening today. So you're going to get a whole lot of volatility today. be prepared for this volatility, and we'll be live with you guys here at 4 p.m. EST to bring you guys coverage of exactly what's happening. Now, before we go into the next section of the show, if you want to trade with us later on today, and if you're a whale, now when I say whale, I don't mean like a big whale, but if you are depositing, say, 2,000, 10,000, 5,000, we've negotiated a deal with Blofin, and there's a link to this deal. You have to use, let me just show you which link you have to use to get this deal. Go to this, and we'll talk about a few altcoins in a second, and I want to talk to you about something else. But here, go to Blofin, use this link, and then you qualify for this deal. So that means that if you deposit $40,000, you get a $5,000 deposit bonus, which means that deposit $40,000, trade your $40,000, right? So trade your $40,000 here, and then you will get $5,000 free. You can lose the $5,000, you can still withdraw your $40,000. So you can use all of these over here. At the same time, I've also negotiated you guys a deal with Bitfunded, right? The deal is that, for those of you who don't know what Bitfunded is, it's a proprietary trading firm. And what that means is that you trade with demo money until you pass 2 phases of the challenge, here 8% and here 5%. And then you trade with other people's money, right? So if you want to trade a $10,000 account, you pay $99. You can get 8% in stage 1 and 5% in stage 2. In stage 3, you're trading with their money, and then you earn 90% and they keep 10% of the winnings. So it's like the most risk-free way of trading. Now, I was supposed to do this yesterday, but I didn't do it, so I'm going to do it for you guys today. If you take, it was supposed to be an April Fool's thing, but it's not actually, so I'm doing it today, and it'll be for 24 hours only. Any account that you buy in the next 24 hours, they will give you one for free. So if you buy a expert account, a $799 account where you're trading a $100,000 account, you will get another one for free. Buy one, get one free for the next 24 hours. Your time starts now. Okay, so your time starts now. All right, so we are going to expect volatility. I do see Bitcoin at 85,779, which is good. It's good. Bitcoin is preparing for today's big move. I do want to talk about one other thing, which is pretty interesting. And that is that Circle, the stablecoin company, has made an announcement that they're going to be IPOing. So the IPO is pretty much imminent, as you can see over here. That's the announcement that they actually made. Now, this is super, super, super exciting. Here's the full announcement. I don't think you need to read this full announcement, but they're going to do an IPO very soon. The reason why I think this is so exciting is because we know that the United States wants dollar domination, and specifically they want dollar domination in stablecoins, so that they can keep the US dollar, what do you call it? Like the master currency, the world's major currency, and they want to do this through crypto. So
stablecoins really have the potential to ensure American dollar dominance internationally, to increase the usage of the U.S. dollar digitally as the world's reserve currency, and in the process create potentially trillions of dollars of demand for U.S. treasuries, which could.
So he's talking about creating demand for U.S. treasuries because of this because U.S. treasuries are going to be on chain soon, or are already on chain, and that people will need U.S. dollars. And the one way to actually invest in this is to actually invest in Circle when the IPO actually happens. Now, all indications that I'm getting is that Circle will IPO for about $4 to $5 billion. But let's look at the actual numbers here. So Circle earned $1.7 billion in revenue in 2024. How does it actually earn revenue? Well, what it does is it takes the money. When you want to mint a stablecoin, you give Circle $100 million. They mint $100 million of stablecoins. And what they do is they invest that $100 million in almost risk-free investments. So like T-bills and a whole lot of other things. And through that, they made $1.7 billion in revenue last year. Now, interestingly, as you can see here, they landed up paying $900 million to their distribution partners, specifically Coinbase. That tells me two things. One is Circle's going to launch. It's got a $300 million EBITDA for 2024, and they're just growing. So I think if you can get it at a valuation of $4 to $5 billion, probably a good way to get in. Another way to make a lot of money out of this stablecoin domination is actually to land up buying Coinbase. Now, you know, we've been big buyers of Coinbase. And what you can see now is that Coinbase earned $908 million from Circle as a distribution fee. So they obviously have some kind of distribution agreement, and Circle pays Coinbase for distributing the USDC. So either way, I'm putting this on your radar. Why? Because we have been trading crypto stocks. We've been trading MicroStrategy. We've been trading Coinbase. I think this is another one. And I think it's a massive, massive, massive opportunity if you believe in the thesis that stable coins are going to take over the world. And I really believe in that thesis. And so here I would look at buying Coinbase. I would look at buying Circle when it actually comes onto the market. I look at buying Curve because that becomes the stable coin or the biggest stable coin exchange out of that. But then what I want to highlight to you is that the way that Circle makes money is by taking the money that they hold and investing it into T-bills. Problem is that if you're going into a lower interest rate scenario, then what starts happening is that they start earning less because, if you invest $100 million at 5%, you get $5 billion. But if you invest $100 million at 5%, you get $5 million. But if you invest $100 million at 2%, you get $2 million. And if your thesis is that we're going into an extended, long-term, a low interest rate environment, then in those environments, companies like Circle and actually even Tether, if you look at Tether over here, Tether made $13.7 billion for 2024, and they did this by investing their $113 billion. They had $113 billion in direct and indirect holdings, right? So when the interest rates go down, these guys suffer. So I think if we're going to go into a major stable coin play at the moment, you want to be in Circle, you want to be in Coinbase, you want to be in Curve, but also you may want to be in Athena. And I'll tell you why you may want to be in Athena. Because the way Athena works is, Athena makes more money when there are low interest rates environments and people have more liquidity. And when they have more liquidity, they take more speculative risks. And remember that Athena makes its money through funding rates, which represent the desire to take risk in crypto markets. And so if you want to build your ultimate portfolio of stablecoins, you invest in Circle, you invest in Coinbase, you invest in Curve, but you also invest in Athena. That way, if the interest rates go down, Circle earns less money, but Athena lands up earning more money. So that is how I would be playing the stablecoins. And at some point, I'll actually make a full show around how to invest in this stablecoin narrative. Anyway, until I'm going to see you guys again later today, 4 p.m. EST. I'll either be on this channel or I'll be on Crypto Live. We'll monitor it. Everything will be on my Twitter at CryptoManRan. Remember, if you haven't taken up your Bitfunded challenge, you have 24 hours to do it. And if you want to trade with us tonight, and you actually want to trade for free, because don't tell anyone at Blowfin, but you can just put 40K into your account, get the $5,000 bonus, and just trade the $5,000 bonus. Just don't tell anyone. There's a link below. See you guys again later. Until then, trade well, my friends.